Okay, so let's dive into a real head-scratcher today. We're looking at the latest numbers from Asian Micro Holdings, or AMH. And honestly, when you first see them, they just don't add up. Not at all. I mean, get this. Their sales are down, but they're somehow losing less money. A lot less. How is that even possible? Exactly. So the question is this some kind of brilliant turnaround? Or is there something else going on behind the scenes? Well, we're going to find out.
So here's our game plan. First, we're going to look at those headline numbers that just seem to contradict each other. Then we'll put on our detective hats and figure out where all their sales went. After that, we'll uncover the secret to how they managed to shrink their losses so dramatically. And finally, we'll give the company a quick financial health check to see what's really going on under the hood. And we'll take a peek at what management is expecting down the road.
All right, let's kick things off by putting these two conflicting pieces of the puzzle right next to each other. This is really where the confusion starts.
So on the one hand, you've got this. Revenue dropped by 16%. To put that in perspective, for every dollar they made this time last year, they're now only bringing in about 84 cents. You know, that's not exactly a great sign.
But then you see this, and it's a total twist. The amount of money they actually lost was cut by a whopping 67%. They went from being over $120,000 in the red to just $40,000. Normally, you'd be popping the champagne for a number like that, right? So that brings us to the big question we need to answer. How do you make less money but also lose way less money? It seems to defy logic, but the answer is buried deep in the financial statements. So let's start digging. Okay, first things first. Before we can make sense of that shrinking loss, we have to figure out why their sales went down in the first place. Let's see which part of the business is taking the biggest hit.
And wow, there it is, clear as day. Their main segment, natural gas vehicles, or NGV for short, it's down about 4%. Manufacturing is down a bit more, but just look at their property business. Yikes. Revenue there didn't just dip, it absolutely fell off a cliff, down 74%. That is our culprit. That's where the sales vanished.
So, we've solved mystery number one. But that just makes the second mystery even weirder. I mean, with the property business getting hammered like that, how did they manage to stop the financial bleeding? Well, it turns out the answer isn't something they earned in the traditional sense, it's something they sold.
Right, the secret is hiding in a little line item called other operating income. The easiest way to think about this is, well, if your main business is a coffee shop, other operating income is the cash you get from selling your old espresso machine. It's not part of your daily grind, but it sure is a nice one-time cash boost. And for AMH, this boost was a game changer.
And here's the smoking gun. This is exactly where that extra cash came from. They sold off some investment properties and a motor vehicle, which brought in a cool $230,000. And there you have it. That's our answer. That one-time cash injection completely papered over the cracks in their struggling day-to-day business. It is the only reason their loss got smaller.
Okay, so we've established the smaller loss was basically an illusion created by selling off assets. But that still leaves a big question. What about the actual health of the core business? For that, we've got to follow the cash. Profit can be tricky, but cash flow doesn't lie.
And this is pretty alarming. This chart shows us the cash being burned just to keep the lights on and run the main business. Last year, they used up about $379,000. This year, that number nearly tripled to over $1 million. So forget that smaller loss headline. The reality is the business is burning through cash 3 times faster than before. That's a huge red flag.
Now, to be fair, there is one small bright spot. Their net asset value per share did tick up a little bit, but we know exactly why, don't we? Net asset value is just a fancy way of saying what the company would be worth if it sold everything it owns. So of course it went up. They just sold a bunch of stuff. They turned a physical building into cash on the books, which looks good on paper, but it does absolutely nothing to fix that massive cash burn problem we just saw.
So the numbers are painting a pretty tough picture for the core business. So, what does the company's own management team have to say about what's coming next?
Well, to their credit, they're not trying to sugarcoat it. Management is basically saying, buckle up, it's going to be challenging. And look at what they're focusing on: efficiency, cost control, and preserving cash. That's pretty much a direct admission that they know they have that cash burn problem. They're trying to plug the leak in the boat.
So let's just tie this all together. The mystery is solved. That good news about the smaller loss, it was a mirage, created entirely by a one-time garage sale of their assets. The real story, the one that truly matters, is that their core business is struggling. Revenue is falling, and it's burning through cash at a really alarming rate. And that's the reality behind these confusing numbers.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.